In this video, I will be showing you a trend reversal technique, an incredibly easy technique to detect trend changes. Reversal trading was impossible until I found this simple strategy that changed everything. And given that the S&P 500 and the general market is down substantially, and we also see that the cryptos are down substantially, there is no better time to master reversals like right now, before the next big major profitable reversal takes place in the markets. Even though in this video, I'm going to be discussing the S&P 500 as an example, this also does work for cryptos and for the forex markets as well. In fact, all trading markets. The same setup was evident here in late 03 before the US markets would recover, and the same setup was also there in the lows of early 2009. By the way, the trend reversal also showed up here in early 2000 and also was evident if you knew what to look for in late 2007 and recently during this reversal here in early 2022. But in this video, we're going to be focusing on reversals for major bullish reversal moves. The method requires a two-step process. Step one is to determine the lows on a closing basis or on a candle wick low basis. There's going to be movement to this high level here forming the edge of the base. Now you determine that on a closing basis or the highs. Now next is to determine where we see a reversal or a failed breakdown. In other words, within the base formation, if we can draw it this way. This failed breakdown is very important because it means you've run out of energy, and it also means weak hands have been flushed out. And don't forget that the manipulators of the instrument, this is where they make their entry right here. So this failed breakdown attempt is step number one and is a bullish sign. Step number two, wait for a breakout above the prior high of your base formation. In other words, this is step number two and this is your entry. Let's take a look at some examples. First, let's go to the lows of 09 right here. This is the 4-hourly for the S&P 500. We have our 4-hourly closing low right there. We have our 4-hourly closing high, which gives us this base formation right there. Step one, you can see the market failed to break down below the base and actually immediately moved back to the base. And then step number two is the breakout above the base highs, which is this entry right there. And there's your entry, timing the lows of early 2000 as of March 09, major lows as the market would go on and begin a 13-year massive bull market run. Now let's take a look at this early 03 lows for the S&P 500. This time a different time frame. This is going to show up on the monthly, the same setup. We have our monthly closing low in late 02, a monthly closing high as of November 02. We have a shakeout here, flashing people out before the recovery. So this failed breakdown attempt brings it back to the base, and over time we break out, moving above the highs of the base. And so your entry was the second step, which is this breakout right here. This reversal timing entry here in early 03 would eventually yield a successful bull market into late 2007. And by the way, as I stated, you can use this for reversals on the way down. You have a monthly closing high right there for the S&P 500 in 07, a monthly closing low, which forms a base formation, which is the black box. We have a failed breakout attempt in late 07. That is your first step, your first warning flag. Your first real break below the base is right here, confirming that there is a new trend, and that trend was for a bearish move that led into the crash of 2008. So the same concept visually gave you this reversal, and it also gave you this major trend reversal going into 08 and is great for timing. You can also use the same method for shallow pullbacks. We can see here a failed breakdown in October 2020, and then your entry is this breakout above the base, which is step number two before the market would go on this big run. Now let's zoom into this reversal for the S&P 500, ending that most recent bull market run and leading to this major drop that we are currently experiencing. In December of 2021, the market was breaking out, but as of January, the market failed to hold that breakout. In other words, the monthly breakout failed as of January 2022, and then we would go on to break the lows of the base, and this was a major sell signal as it confirmed part two of this two-part trend reversal process. By the way, if you sold here using this method, you would have seen that the market actually tried to recapture that same level but was rejected here and again rejected here. More than likely because the trend reversal had already been confirmed here, and that was the ideal exit point.